Hello and welcome everyone to another market commentary from StashAway. With us again, our Chief Investment Officer, Freddy Lim.
Hi there.
Hey Freddy, thanks for joining us again. I would like to put attention first before we get into any investment talking. We have a couple of interesting seminars coming up from StashAway Academy. The first one will be in Singapore. It's going to be a live webinar, unfortunately, due to the virus spreading, and we want to make sure that everyone is staying safe, so you can dial in via the webinar tool. That is on the 12th of February, 2020. That's on Wednesday next week, actually. And you can subscribe on that by going to our website, stashaway.sg/academy. You can also find our Eventbrite page or Facebook page. So wherever you signed up before, if you're new, you use one of those spots. Sign up for that. It's going to be very interesting. We're going to cover CPF, SRS, and ways to optimize your retirement plan. In Malaysia, we actually have an in-person event, and that is going to be on the 19th of February, so in a couple of weeks. And we're going to be talking also about how to plan for your retirement. Again, we're maximizing EPF, we're talking about PRS and things like that. So if you're interested in that, please subscribe via our Malaysia website, which is stashaway.my/academy, or on our Eventbrite and Facebook page as well. With the events being mentioned, Freddy, let's turn our attention to the big elephant in the room, right? We kind of mentioned it last time already, but it's becoming this gigantic issue that no one really thinks is under control yet, right? Want to give us a quick update on what's been happening so far before we dive deeper?
For one, the media is going to be very focused on the spread of the coronavirus. You may also heard that certain companies has shut down some factories and plants in China. So there's going to be a lot of fireworks in the media. What I have to recommend instead is a data-driven, fact-based approach where we actually go back to look at all the past major epidemics, pandemics, or what have you, and really see what it does to markets. So let's have a look at some of the facts and figures on the screen here. Wow, the biggest impact and the longest one is actually the HIV/AIDS episode of June 1981. And in this table, you can see that it is the longest impacting event with a 5.1 months impact on the markets. By the market, we mean the MSCI World Equity Stock Index to proxy global stock markets. So, and pick the bottom, HIV did generate a 17% correction from its peak back then. The second most talk about epidemic outbreak was SARS of 2003. Happens in April 2003. China was affected, Hong Kong was affected. So it's a very interesting one as well. And pick the bottom, it has an impact of 14.4% on the global stock market.
And that's probably much closer to the current one.
Yes,
right?
very close to the current
one,
impact. However, look at the shelf life of the virus in terms of its impact on markets, 1.9 months. Yeah. So other than the HIV or AIDS episode, all the past pandemic that you see on this table here, they generally lasted no more than 2 months in terms of market impact. And more importantly, post the impact, you can see after 1 month, after 3 months, 6 months, 1 year, or 2 years, the market always rebounded very healthily. So moral of story of all this data-driven analysis is that you're not supposed to overreact to it. You're supposed to stick to your investment plan.
Absolutely. So when you say, like it doesn't have that much impact on the market, right? People are saying like, oh, but like the whole country of China is at a standstill. It's a big consumer market now, right? But I feel like, the government is doing everything they can, right? They're pumping also money in the markets. The markets have reacted quite sharply, but then now the US the last 2 days almost erased everything that was had the impact already. And we're talking a couple of days, right? It's not over yet, but it feels like it's not as bad as it thinks. It's priced in now, kind of thing.
Well, there's a few things to consider when thinking about its actual economic impact. First, the economy has become less physical these days. We have 3D printing, a lot of stuff like e-commerce is done online, right? So in a way, impact, yes, China is bigger as a share of global GDP now, but its physical demands in terms of transacting businesses is less than before. And number two, some good news actually. We have been mentioning this before. When you look at the China Li Keqiang Index, which is a better proxy for China's growth, measures freight volume, electricity usage in China's factories, and also bank lending. These numbers have rebounded strongly in the last quarter, every single month of the last quarter in 2019. So the virus at best would slow, or maybe sort of a delay the economic rebound a quarter or two, but it's not going to derail it.
Yeah, and I think that's the main thing that we also wanted to show by showing these different scenarios of other viruses or health events that happened before, right? So it actually puts it into perspective, right? Because the media, as always, is so overjoyed, like, oh, they have a story to tell right now, right?
Exactly.
Now they can make it as bad as possible, right? Everyone has to wear a mask.
And this sort of effects also get compounded by not just traditional media. We have a lot of social media
nowadays, right?
Yeah. So things are oftentimes blown to out of proportions in these days. Yeah. I'm also pleased to say that for StashAway clients who's been investing with us, the coronavirus so far has zero impact on our portfolios. Yeah. In fact, the first case of the Wuhan virus was reported on the last day of 2019. So it so happens that year-to-date return is also a good proxy for what's happening to your portfolio since the virus was reported. And I'm pleased to say that StashAway portfolios across all risk points has clocked in 2 to 2.2% in Sing dollar return, and about 1 to 1.3% in Malaysian ringgit terms, and in US dollar terms, about 0.3% to 0.5% on a year-to-date basis. So this thing really has very little impact for a portfolio that's designed to be highly diversified, very global, and also a portfolio that's designed with a lot of insurance in mind.
Yeah, and I think maybe we can get into this for a little second here before we stop for today. If I'm, as a StashAway customer, we know you're looking at data-driven things, right? But what should I do personally, right? Because my friends are saying it's going to be really bad, right? The news is saying it's pretty bad. I know we always say to be cool and level-headed, right? But what is your take on that? Like, how should I react?
Well, stick to your plan of averaging to the markets, especially for savers who save monthly from their income after expenses, that you invest in net savings. When you do so right now, when the markets are down, through this averaging approach, your latest contribution is getting you more units of the underlying assets. So really, we strongly recommend not reacting at all, but continue to average into the markets as per your plan, as per your life goals. Nothing has really changed.
No, nothing has changed, and you don't want to blow up your goals, by going out or like derailing your plans, because this is what really,
And this is actually a very good point. In closing, another analysis that used to be quite popular, it was published by JP Morgan Asset Management. They conducted a 25-year study on the S&P 500 alone. And if an investor would have stayed invested every single day for the last 25 years, the return would have been at 9.8% per annum. For those who try to do market timing, having missed the top 10 best days in the 25-year period, just missing it would have reduced the return by a third, from 9.8% to 6.1%.
And that's pretty huge. That's 10 days, right? How are you going to come back into the market to not miss those days?
And if you miss another 10 best days, so now top 20 days, your return go further down, from 6.1 to 3.3%.
So it's huge.
It's huge. So it's best to curate your investment plan, set up your risk level correctly, and invest systematically on a periodic basis.
Yeah. Well, thank you so much, Freddy. I think those are great closing words for everyone to listen to. We hope you tune in again for another market commentary with us. Otherwise, we wish you a wonderful day, and we'll speak to you again soon. Subscribe to our YouTube channel to get notified whenever we have new content out for you. In order to see what your money can do for you in the future, download the StashAway app. You can do that on the Apple App Store as well as on the Google Play Store. And both of those links are in the description below.